Hey guys, this is a market update. We are in an official recession, but the market is rallying. Why is it rallying? How long is it going to rally for? Is this a fake out? Is this a bear trap? Or are we actually going to start printing some higher lows right here? A lot to go through in this video, including, the recession, the Fed's reaction to this, and the market's reaction to what's happening with interest rates and what they think the Fed is going to do. Because, we are in an official recession, whether politicians want to admit that or not. And so when we have recession, central banks have to do something to stimulate the economy. Every single recession where we've seen before, central banks stimulate. Now they can do that through monetary stimulus, and governments can do that through fiscal stimulus as well, which is happening right now. That's why the market is reacting positively. Now it's still very small scale in comparison to the drawdowns we've had, but the market is starting to think, is this a bottom? And I've talked about this for weeks now. So, you can see the bottom here at kind of 17, 18,000, which, I've been saying a long time. The regime has flipped, interest rates are not going up anymore, which I'll have a look at. So is this a fake out? Is this a bear trap, or are we going to start printing some higher lows and actually start, going up? On a technical basis, as you can see, Bitcoin right here is actually in a really nicely kind of bullish pattern of higher lows. So we broke through this support level. Now this green box here was from previous market update videos, which was all of the news that came out this week, which is, Amazon, Apple earnings, bunch of other S&P 500 stocks, and also the the Fed's rate decision, of course, which was 75 basis points. That was priced in. But look at what they said about what they're doing. They said, this is Powell, appropriate to reduce the rate of hikes. Now, the market took this basically as a flip, right? The Fed flip saying, we're kind of done, right? So they put those 275 basis point hikes through, and now they're not going to be doing that anymore. And that was, you have to read between the lines between everything that they say here, of course, but appropriate to reduce the pace of hikes. What they're admitting now is that the economy is starting to slow. That's really important because the Fed always looks backwards and the market always looks forward. The Fed cannot look forward because they just can't be seen to be trying to predict something that hasn't actually happened. So they're starting to say that, and the market, of course, is reading into this and starting to price in lower rates. What you can see from Bitcoin is that we have indeed created a kind of support level here now. So we tried to break out once and got rejected. We went back to the previous support, and we are actually bounced off of that support into the resistance again. And we've actually turned this, what I would assume now, is a support. So look at the kind of 24,000 level, 23,900 level as a support level. If this holds, and we're going into the weekend, so maybe it will consolidate around here. If it holds here and then starts to move forward, then really the next big price level that we're looking at is this resistance line right here at around 28,000. Now, that could be a medium-term target. I don't think we're going to get there in a matter of days. Depends on the market and how it kind of churns through that news. But it's potentially that we could, trade between this level right here, this upper bound, and this lower bound. It looks like the market has turned somewhat. If you want to go ahead and trade on Bybit, I'll leave the link in the description. They'll give you a deposit bonus in your account. No KYC. Deposit crypto on there. They'll give you up to $4,000 as a deposit bonus in your futures trading account. If you trade, then definitely check out that link. What we can see here is US 10-year treasuries, the rates here, and you can see that we are actually breaking down through support here. So this is positive for Bitcoin and the risk asset markets. As you can see, this is a classic head and shoulders pattern. So you have the shoulder, as you can see here, you have the head right here, and then you have the shoulder here. This is a classic reversal, uptrend reversal pattern. And you can see we have indeed broken down through this support here. So rates, as you can see, interest rates for borrowing money have come off a ton in a matter of weeks. Up from that high, as you can see right here, we're down about, let me get this right, we're down about 25%, something like that, 23, 24%. Money is 24% cheaper than it was just last month or 6 weeks ago. That's huge for markets, especially crypto, as we know, because Bitcoin trades off of interest rates and money supplies. So what we're seeing is the market saying that tightening has come. The recession is officially here, whether politicians want to say it or not. And now we're actually going through to stimulus. So what's coming? Well, the Fed is going to keep raising down through August, September, and it's going to keep, obviously, everyone in the loop there. Now, there's some bad points as well that we need to focus on. Firstly, though, Biden's stimulus. So he's coming out with a stimulus, various things that are positive for markets. Solar tax credits, EV tax credits, medicine costs apparently coming down. All of this is potentially political because we have the midterms coming up. This isn't going to change inflation short term at all, maybe medium and long term, if these things go through. But what you can see is things are flipping now to stimulating, because what they say and what they actually know is happening are very different. And they can see that demand has completely fallen off a cliff. We're going to look at this as well. This is from Raoul Pal. This is his GMI Financial Conditions Index. We've seen this in other videos. You can see that right here, financial conditions are about the worst they've ever been, right? So the 2008 financial crash, which is the biggest recession and just, awful economy that we've seen in living memory, right? Conditions are apparently around the same as that, right? So politicians, no matter what they say, are seeing this and thinking, we have to stimulate now because of the lack of growth right here. So looking at this, we're in a stimulating environment, or the very starting phases. Something to keep an eye on though, definitely, is potential bad news here. August and September, CPI is coming out. This has to come down, right? If this doesn't start coming down, then, all of the progress we're making in these charts right here is going to be taken away, because if CPI doesn't start coming down, we're in a really bad spot. It's not going to come down to the 2% target. That's what their target is. It's not going to come down to that. But if it doesn't start coming down to 8, 7, 6, right, then there's going to be a real big issue with, growth, and they're going to have to start raising rates again, maybe, or, eking out rates. And so that's not a great environment for risk assets and Bitcoin. There is potential downside risk for stocks, because with all this inventory that consumer cyclicals have, like Walmart, that's going to cause deflation, which is good generally, not good for those specific stocks. But for Bitcoin and crypto, completely irrelevant for the most part. Stablecoin regulations have been delayed and won't go through until after the midterms. That's not great for crypto. That's really the next growth driver where, a lot of money can come in and start, flowing around the space. Then the SEC isn't great either. Obviously, they're taking Coinbase to court, and that's going to play out. However, what we're looking at here is a definite easing of conditions and some stimulus even starting to come through, both in the States and certainly in China as well. I want to focus on this as well. This is the ETH Bitcoin chart. Now, I've been looking at this for a while. So this is ETH priced in Bitcoin, and you can see that ETH is making big gains on Bitcoin here. This is a very long-term, see this orange uptrend is a very long-term uptrend for ETH against Bitcoin. And what we've seen here is another breakthrough. So this was all of the selling of Ethereum when all the bankruptcies were happening, and this is completely recovered now. It would have been great if you got in around this level. This is obviously the great level to see it back as a short-term trade to this resistance line. But this resistance now is seemingly actually support again. Now, with the merge coming up over the next few months, everything looks quite positive for that. I would expect this to continue going up and possibly looking at kind of testing other resistance levels, which would be, this level right here around 0.074. So ETH is very strong against Bitcoin, at least in the short term. So that's definitely something to watch out for. This trade has, gone up a lot already, but there may still be a lot of room, especially if everything with the merge happens on time. So yes, I do think there is some runway here to reach higher highs, even though the market has gone up a lot already. ETH is up like 70%, Matic, Uniswap, they're over 100% up from the lows. That's altcoins. Bitcoin still can very easily have higher lows right here and start to actually make some ground back. But like I said, there are some potential risks coming August or September. Inflation is the big one. That has to start coming down. If it doesn't, then the market is going to react pretty badly again, because that is kind of the main thing that's holding everything back. If you want to trade on Bybit, I'll leave the link in the description. They do give a deposit bonus for you up to $4,000 in your futures trading account. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.